Okay, great. Randy, hi. Welcome to our Insurance Masterclass. So this is a sequence of interviews that we're doing with leaders of the industry and just trying to dive into the impact of digital trends on the industry, particularly around the operations of insurers, how brokers are operating and how consumers are. So thank you very much for joining me today. And I wonder if I can just get you to do a quick intro of your background.
All right. I was very blessed. I've worked at 4 major institutions. And so I worked at one of the top 5 insurance companies in America early in my career, Northwestern Mutual Life. I worked at one of the top consulting companies in the world, Willis Towers Watson. And I've worked at one of the largest insurance distribution companies in the United States, M Financial Group. So I was an actuary in my first 2 jobs and CFO and senior vice president in my 3rd job. And now I'm blessed that I am adjunct faculty at Portland State University and working as a consultant at a company called Insurex. So it's been a really good career working with the best of the best in the US life insurance industry.
Randy, will you just give us a little bit more detail on how you and Fred really changed the game when you were at M Group as regards agents and reinsurance?
Yeah, well, I mean, it's sort of interesting. I mean, when you look at working at Northwestern Mutual Life, which was considered and is still considered to be one of the best distribution insurance companies in America, I brought that forward into my consulting practice. We then did consulting, and Fred convinced me to join M Financial Group. At the time, we did about $300 million of first-year premium. Within 7 years, we had grown that to $1.5 billion. And the really way we had done that was by really looking at some very simple concepts. The first concept we looked at was value creation. How do you create value for the client? How do you create value for the member firm, which was for us the life insurance agent distribution? And how do you create value for the insurance company while minimizing expense? And it sounds simple and it sounds easy, but it's not, because people are very much entrenched in how they do business. And so in that time period, we changed the way broker-dealers were handled in the industry. We changed the way in which products were priced and designed. We changed the way in which people approach the market and talk to their clients. And so that's really, in sort of a nutshell, is we've always been about innovative change. How do you look for disruptions in the industry and be ahead of them? And I think when I was recruiting member firms for M, which I did for quite a while, one of the things I used to tell them is, we know the world's going to change every 3 years. That's just a fact. And the question is, when it changes, are you going to be afraid of the change, or do you want to be with a company who's anticipating the change so that you're out ahead of it and you can capitalize and leverage on the change? And so that's really, I think, the thematic drive that Fred and I had was anticipate change, be out ahead of the change, don't be afraid of the change, but embrace it and make a lot of money from it. And I would say in a nutshell, that's how we drove M Financial to such prominence in the time that we were there together.
So I've got two questions on that, right? And answer them in any way you want. One is, as a guy who's been working in the insurance industry for about 8 or 9 years, doing something quite different, I found it very difficult to lead any change in the industry. So I'd be very interested to get your view on that. And the second part is, I'd love you to expand just a little bit more for probably people in Europe who wouldn't understand this as well as they would in the US, the way that you set up a reinsurance group which actually backed up your brokerage, because I think it seems to me to be a very unusual model.
Yeah, and I think that sort of goes, that's actually the same answer. How could we get the change to happen, and how did we how do we set the company up? So we call them member firms. They're independent life insurance distribution companies. They banded together to own M Financial, and we represented them. And we would go to carriers and work and negotiate on their behalf on carriers. And what happens is, when you go to a carrier and you do $10 to $20 million of sales, you're kind of important. When you do $1.5 billion of sales, they pay attention to you. But even when we were at $300 million of sales, they paid a lot of attention to us. But that wasn't enough. The other thing we did that was sheer genius, and it was not me who did this. I came in and helped keep doing it. So it's not one of those self-congratulatory, oh, it was genius.
Yeah, sounded good, Randy. I liked it. One of the things I did that was sheer genius. Just leave it at that. It's brilliant.
Was we set up a reinsurance company. The reason we set up a reinsurance company is we came to an carrier and said, hey, our clients are different. We need a product that's priced differently. And they said, if we price it like this, we're going to lose a lot of money. And we said, no, you're not. If you lose money, we'll pay you for half your losses. But in return, if you make money, we want half the gain. And they said, fine, we'll set up a reinsurance company. And so it was really set up not as an economic engine, but really set up as to get us economically aligned, so that the carrier's financial success and our financial success were now economically aligned. And that economic alignment allowed us to go to carriers and talk to them about products, about distribution, about underwriting, about innovation, because we could say, we've got an idea, and oh, by the way, we're taking half the risk. And so that reinsurance company in the back end of the transaction allowed us to not only be at the front end where we had the best intelligence because our owners were talking to the client every day, we also were at the back end with all the financial risk. So we could say we've done the intelligence and we're putting our money up to it. And not only is it our money, it's the money of the people who are on the front line selling the product because they own the stuff. And to give you a sense of how successful that model was, in the time I was there, we paid approximately $1 billion of value to our member firms in the time period that I was there. So this isn't just oh, it looks good on paper. It was real. I mean, $1 billion is real money, not $1 billion of value creation, $1 billion of paid money in stock to the membership.
Yes, very significant. So what's fascinating about that is it sounds to me like in this particular case, the guys on the front line, the actual agent or broker, whatever you want to call him, they were the kind of tail that wagged the dog. They actually understood underwriting better than the insurance company themselves. In other words, they understood it so well, they were then willing to actually take some of the risk. That is what happened.
Yeah, I mean, not just underwriting, but policy maintenance, policy issuance, and most importantly, the policy features that were resonating with clients. I mean, if you think about today in a digital world, everyone does A/B testing. You go out there and you quickly put stuff up and do A/B testing. When you can't do A/B testing when you're doing a very complicated high-end sale. I want to be clear, M Financial was in the high-end market. We marketed, and I know this is probably not politically correct, but we marketed the top 0.5% of Americans. That's our target market. And so you can't access those people easily. You can't get reads on them easily. You can't understand what's going on in their minds easily. And yet these people could talk to them on a regular basis and we could bring it back. By the time I left, an independent survey company said that approximately 30% of our target market owned our product. And you have to understand, in the US, that is an unbelievable market penetration. Most insurance companies like Northwest Mutual Life, et cetera, have a 6 to 7% market penetration. We had a 30% market penetration in our target market because we were so close to what was going on, when they changed, what were they thinking about, how were they being accessed. And we were able to bring that information and knowledge to our partner carriers. And we were able to say, these are the features we need. This is why we need it. This is the price we need for it. And you're going to make money because we have a bunch of actuaries who've already done the pricing and made sure it's profitable. And we bring these packages to people and say, and not only do we believe it's profitable, we believe so much it's profitable that we're going to take half the risk. And if we're wrong, we're going to lose a lot of money. If we're right, we're going to make money with you.
And that was the key to leading change. The fact that you absolutely aligned yourself with them. That's very interesting because if you look around the insurtechs, all over the world, I think we struggle to really align ourselves with the big carriers. No, definitely. Interesting. So yeah. Tell us a little bit about Insurex and what you're doing at Insurex and what's the focus of Insurex?
It's really nice. I mean, it's sort of interesting for me. All my career changes have been because of a major life change. And so I left M Financial because of a major life change and joined Insurex. And it was really I love teaching. So I've been faculty at Portland State for about 5 years. I did it as I was part of CFO of M Financial Group, and wanted to go into consulting. And I talked to my good friend, Doug French, who was the head of Ernst. He and I were together at what was called Tillinghast back in the day. We were trained up together. He went and became the head of Ernst & Young's international actuarial practice. And he and I were talking, and he said he was really glad to be retiring because he didn't get to work on things that were intellectually interesting. He had to work on things that brought in a lot of revenue to feed the beast behind him, all the people and all the mouths to feed underneath him. At Insurex, we're designed completely differently. We're 8 partners. Nobody has a salary, and there's nobody to feed. So we only have to work on things that we think are interesting, that we want to work on, and that are intellectually challenging, and we don't have to do things to keep a bunch of people fed. And so for me, I mean, I did what he did for a long time when I was with Willis Towers Watson. Mm. Feeding the beast can be draining after a while. So I'm in the unenviable position of I only work with clients I like, who I think are transforming the industry, and who actually want to listen. And those 3 things are really important if you want to make change, because change in my industry is very difficult. It's a very security-based industry. Because of COVID, there's so many stress points right now. There's things they have to work on. And so this Insurex is just fantastic. And my partners are all senior executives from various areas of the insurance industry. And so we bring a breadth of knowledge between technology. Fred and I come out of distribution of life insurance. One of my partners was an insurance agent for a long time. And so we have this whole breadth of knowledge around the economics of the insurance industry and the distribution of the insurance industry. And we've mirrored that together into an 8-partner firm.
And what are you seeing? Who's impressing you, or in terms of what are the models that you're seeing that are impressing you in terms of lead generation and closing things, and that whole piece? What have you seen?
Well, the thing about lead generation, it's sort of, there's lots of lead generation, right? I mean, there's talking to your friends to get leads. That's the old traditional one. I have a couple of my clients who are actually, my clients are not just companies, they're also insurance distributors. I do business planning for insurance agents and financial advisors. I have a couple of them that are now hiring kids out of college who are bored to just dial phones to set up leads for them. And that has actually been very effective for them. I've seen some people do online lead generation, and those are a disaster. You may only pay $1 or $2 for it, or $3 for it. And in the industry conversion rate, I was just talking to one of our potential clients who acquired a big lead generator, and you guys can figure out who that is. And they were basically talking about how their leads, their whole goal is to get their close rate to go from 0.75% to 1%, because that will make such a difference. But if you're an agent, you can't afford to do leads like that, because you're spending so much time on every sale that at the end of a month, you'll get 4 sales if you work full-time on leads. 4 sales or 2 sales, you can't live on that and work full-time. And so they can't afford to work on those kind of leads. The winner who comes out of this is going to be the person who can get a lead generation close that's 10 times better. You go from 1% to 10%. If you can get to a 10% or higher lead change, now all of a sudden agents are closing, if they can work 20 leads a week, you're talking 2 sales a week. You can live on 2 $500,000 sales a week. You can't live on 4 $500,000 sales a month. You'll be out of business.
Yeah.
So the people who are really thinking about leads are going to themselves and saying, I'm willing to pay a lot more for a lead if it's more effective. I'm willing to pay, rather than a couple bucks, I'm willing to pay $30, $35, $40 a lead if I can get to a 10 or 20% close rate. But what happens is that close rate is really hard to achieve. And the reason it's hard to achieve is because from the research I've seen and looked at with my various clients, if you don't call those people back if you could, first of all, do what we call targeting lead generation, where you actually target, do you want life insurance? And someone says, yes, I do. Or do you want this? Or do you, whatever your lead generation, do you want this? And someone goes, yes, I do. You've got between 10 and 20 minutes to call them back to get a good close rate. And I call that the golden window because I'm a big Willy Wonka fan, and it's a golden ticket, always makes me laugh. So sorry, but within that golden window, you can get really high returns. And as you leave that golden window, your close rate becomes worse and worse. But what we find when we look at actual agents' desks, because they've been given so many bad leads for so long, they just sit on their desk. So the next thing you have to do if you're doing lead generation is you either have to have an automated system or a sales manager who confirms that the agent has called these people within half an hour and follows up. And so you have to have a very disciplined structure to make sure people are called on a regular basis. And when you do that, we've seen people have success as high or even higher than 20% close rates. Yeah. And once you start getting those 20% close rates, agents fall in love with it. You get these nice dispersion of risk of sort of equally sized policies. And it's really cost efficient for the agent, which makes it more cost efficient for the insurance company. Because what happens in a traditional insurance company is that you are doing an RFP, you're quoting on 4 to 5 pieces of business and you get one. So the insurance company closes maybe 1 out of every 5 or 20% of what comes to them, okay? But they have to pay for the underwriting for all 5 of them. When you're bringing leads to an agent and the agent only underwrites it once and it goes right to that insurance company because they're helping generate the lead, you're getting 100% close rate. You just squeezed 80% of your underwriting costs out of your sales process. So it's incredibly efficient for the insurance company. It's incredibly efficient for the agent. And it's going to revolutionize the way that sales occur in the United States, but only for the people who embrace targeted ads with making sure things occur within the golden window. And if you don't do that, you're just wasting your money, in my opinion.
So I can absolutely back you up on that. If I look across my clients across the world, obviously that's our game, is targeted leads. But if you look across, the ones that really make best use of our leads are the ones who have incredibly precise systems that mean the leads get followed up very, very quickly. And your term, the golden window, I hear it being used around my organization now as well. So I totally get it. That golden window is everything. There's one question that is burning that I haven't asked you, and what that is, your faculty head at university. What faculty are you head of?
Well, I mean, in the U.S. it's just called adjunct faculty. I teach in the School of Business. The course load this term is I'll be teaching finance to juniors and seniors, and I teach introduction to personal investing. I'm teaching that right now. It's an online course I designed as part of my master's program from Northwestern, which I got this year. And so, so we're doing that. It's really fun. I taught it this summer and we're teaching it again. And so that's what I teach. So how do you invest? How do you do personal investing, and how do companies do finance? So you can sort of see where my passion is, sort of money, value chain, and distribution.
Are you likely to get any of these young guys interested in selling life insurance in the future? Because as I look across the world, one of the issues that you have is life insurance agents are aging and young people don't seem to be interested in coming into the industry.
The problem with in the United States life insurance industry, I don't feel qualified to speak outside of the United States. From all my knowledge is all US based, basically. It's all commission, so there's no certainty. There's no salary. And it's what you can sell. And the hardest thing to do is to generate a lead. A lot of people can give good advice. A lot of people can close things. It's the rare individual who can sell a lead. But as someone who was in charge of sales for Willis Towers Watson, for North and South America, I was dealing with actuarial consultants who were the most verbal of the consulting, of the actuarial branch. And let's face it, I mean, the old joke is true. An actuary is an accountant who couldn't stand the excitement. But, but the ones who could close business were far and few between, and they were incredibly valuable. And they were the first ones who were snapped up by industry with huge salaries. So the people who can close business and sell ideas and generate rainmaking are the first ones to be snapped up by all industries. So they end up in investment banking, venture capital firms, and they end up at higher paying jobs. The insurance industry is designed that you spend your first 10 years building up your block of business, then you start making money. There are very few people who want to spend 10 years building an infrastructure with the hope of making money. Mm-hmm. So again, when you change it from them having to find leads to you can generate leads for people, you now have changed the entire paradigm of who you can bring in as an insurance agent. And you now have people who today aren't predisposed. And again, I hate talking generalities because they're not accurate, but they give insight. In general, having said that, now watch me get myself in trouble. In general, older white males tend to be more comfortable working solely on commission. The rest of the world, younger, non-male, people of color, want a little more security. They want a little more certainty, and they don't want to have to bank on finding their own leads. If you create a good lead generation system, you can now create a much more diverse workforce, which is much healthier for our communities. You can then access more diverse communities because you have a more diverse distribution channel. And you can begin to do things you haven't been able to do because your current distribution force, quite frankly, is very old, very white-haired, and very, very male.
Yes.
So lead generation is the future of diversification and opening up new markets, smart lead generation and training programs.
Perfect. So Randy, that's fantastic. Thank you very much. As I come away from it, I feel very hopeful, actually. I think, okay, because I get it from the lead generation side of things, you know, Facebook and Google mean that you can create good lead pools if you understand the digital side of the world. If you then stitch that together with a kind of lead management system, which means that people call those leads in the golden window, you start to get the kind of results that encourage insurers to invest in this kind of lead side of things. And by doing that, you may well start to open the doors to recruiting a younger and more diverse agent population, which you might reflect on this conversation in 10 years' time and see actually the number of insurance policies being sold is rising rather than contracting as it has been doing for the last 20 years. Well, Randy, thanks again for your time. And I'm sure that we'll come back and revisit the conversations in the future.
Oh, fantastic. Thanks. It was a pleasure talking with you, Nick. Take care.
Cheers. Bye, Randy.